Gold is soaring to all-time highs right now, a very similar move that preceded the last crypto bull run. The US dollar on the weekly zoomed out, imploding, a very similar move to what happened in the 2017 crypto bull run. Meanwhile, our risk scores for the total global crypto market cap, 31, and our risk model for the altcoin market cap, 22. We are in unprecedented times as we evaluate these charts. Altcoin market cap sitting at all-time high, testing that area. Right now, I want to break down why now is not the time to be bearish. I want to show you the data. I want to talk about the U.S. shutdown because what that means on the macro, very interesting data in terms of what plays out in the next 12 months here. And this is revisiting past data. So hit the subscribe and like on the way in. If you're not in our intelligence system with our risk models, please get back there. We have a free trial going on right now. Click the link below, get set up, see your assets that are back there if we have your asset listed on the risk model, and start planning your exits. Right now, and I'm really gonna show you some data, we're in pre-bull market territory. And as I evaluate what's going on with this US shutdown, we have some interesting things going on. So I do want to talk about all of this macro. I want to use an Ethereum chart on the zoomed in. Still some caution. Ethereum testing, a very key resistance area. Don't be so faked out in the short term. Don't get all hype because we see some green candles right now. But let's start with the macro and then we'll talk about that. Government shutdown facts the media won't cover. The average length of a shutdown is only 8 days. Look at this one. The S&P 500 has ended higher 1 year after a shutdown in 86% of cases. So kind of remember that as we're going to pivot to our risk model data and we start seeing, well, at our current risk scores, what happens within the next year? The S&P 500 posts an average gain of 13% 1 year after the shutdown ends. During the 35-day shutdown in 2018, the S&P 500 rallied 11%. While the government shut down, the U.S. defers $400 million a day in costs. The Fed generally turns more dovish if government data releases are paused. That's important because right now we have our eyes on the Fed as they have begun interest rate cuts. As I talk about all of these things, this is clearly macro data, right? This is talking about, the next year. What happens the next year? I saw this post. This is important for the short term to be cautious. The U.S. government shutdown has happened today. During the last 2 shutdowns, Bitcoin pumped first and then dropped sharply. So in the short term, everybody, like today, we have green candles. It's great. It's fine. In the short term, we might get a crypto dip. Just be careful about that. So what I want to do is I'm going to look at the short-term price action in Ethereum in particular to give us a really nice roadmap for continued tracking of the short-term price action, the volatility that could be here. But I really do want to show you something. I was kind of studying our risk models, namely our global crypto market cap, which includes everything, including Bitcoin, as well as our altcoin market cap. And I just noticed something, and I just want to explain to you. When the time to be bearish is here, I'm gonna create content on that. I'm just not there yet. I'm not there at all right now. And I want to show you why, at least from our risk score perspective. We've been covering all types of data, right? The macroeconomic, the business cycle, the pro-crypto legislation, ETF stuff. All of that data is suggesting it's not time. Even the shutdown data is suggesting, hey, the next year might be green. But look what I noticed. I want to show you something on the global market cap chart. And I had these risk models built. Obviously, we launched a company I'm incredibly excited about, but this is something that I'm using for my analysis and my macro decision making. And so when you hear me state like how macro bullish I am, this is a huge reason for. And I'm just standing behind that because, and by the way, risk models aren't guaranteed, right? They're not flawless. But this is incredibly useful data for me as I track this macro. So I'm looking back here at the January 2021. The reason why I'm looking there is because I'm like, you know what? This was the global crypto market cap breaking all-time highs basically, right? And I'm looking at the global market cap here and I'm like, we've broken all-time highs. Like we've broken all-time highs back here like almost a year ago. Notice something. I just looked at this. If you look at January 2021, when that move was happening, The risk score for this chart was 55. So it's like getting up there. It's still like in very neutral territory, but that's testing the previous cycle all-time high and getting ready to break it. We are like a year after. Think about this. And this isn't just a chart that we like whipped up. This is a risk model, our proprietary risk model. All of these models are proprietary, and a ton of work and data goes into this. So what you see here, for me at least, I'm just going to say, is incredibly meaningful. We are almost a year, as we've identified, after breaking all-time high on this entire crypto market cap chart. We're almost a year, and we're hovering well above all-time highs from last cycle. And the risk score is a 31. So last cycle, we were at a 55 as we're like about to break all-time high. And you can just see it just continued into that like overbought. You see the risk model getting really just kind of into the 70s. And even if you look 2 cycles ago, just how quick that move was, that parabolic move. This cycle, and we see this from so many different perspectives, just look at this. It's so leveled off. The bull move for crypto, in my opinion, is still so in play and has not happened. We go to the altcoin market cap chart. Now, a couple things I noticed, and this is a little bit of a different twist. The structure of the altcoin market cap chart, and I've been covering this structure very similarly on like a Cardano chart, but I noticed this on this chart. If you look at last cycle, like this last swing low before falling into the bear market bottoms, right? This rejection at the 20-week moving average. If you take this trend line from that area and just kind of pull it across, and altcoin market cap chart is just like consolidating for years before making the breakout move. Look, here's the 20-week moving average resistance this past cycle falling into the bear market lows. We take a similar trend line. We've not broken that trend line after years, and this is even longer. Look at this higher high, higher low consolidation. This, in my view, the frustration along the way that has been here for altcoin holders in particular, this is like an exchanging of capital from just people that are fed up. They're losing the patience. They wanted the quick gains to, you can call it just patient money, value investors that are on the macro seeing this setup. That's what I think is happening here. But what I noticed was, if you look at this 20-week moving average and altcoin market cap getting ready to make the breakout move, we could be there right now. Like we're just above the 20-week. We might have a breakout move. I don't know. And if this cycle has taught us anything, don't do that. Don't just look for similar structure and the similar breakouts happen. This has been a patience game. But just let's take this area just above the 20-week, looking for that move to that trend line, similar to here. Well, here we are. Back here, we can call it mid-November 2020. If you go and you look at our risk model for the altcoin market cap chart mid-November, check it out. Even then, in mid-November, we were at like a 31. So that is when the altcoin market cap chart at that moment was still like 200 some percent away from all-time high of the previous cycle. Right now, we're hovering at all-time high from last cycle, and we're at a 22. The risk has been so leveled off. This has been a slow accumulation phase. One theory could be the suppression in these markets to allow for that changing of hands into all of the institutions that are rushing into crypto right now, especially as we approach this, not approach, but we're already in this pro-crypto legislation and the unlocking of innovation and liquidity in the crypto space. These risk scores are very telling, in my opinion. But notice this on the altcoin risk score. Historically, at the risk level 22, the price was higher 69% of the time after 3 months, 75% of the time after a year. That's interesting when we think about the shutdown data that we were just looking at, right? 86% of cases, the S&P 500 has ended higher 1 year after a shutdown. But then go look at the total crypto market cap, including Bitcoin and Ethereum. At this 31 risk score, the price was higher 73% of the time after 3 months, 90% of the time after 1 year. So again, there is no guarantee. I've been very consistent from bear market lows in terms of my bullish sentiment for the macro, in terms of my game plan for the macro. And I continue to remain consistent, not even based on our risk models. And you can see if we start getting into crazy territory, these risk models are going to be so useful for myself and our members to start knowing when to take profit. But we continue to just operate in this realm of moderate buy, low risk territory. Meaning for me, the move has not happened yet. But this is why I'm macro bullish alongside all of the other things that I'm talking about. So let's end this with an Ethereum analysis. This is a caution chart, but also a bullish confirmation chart. I did this in last night's video. We are approaching the 20 and 50 day moving averages. This pullback to the area, incredibly normal. As you know, we got the 20 falling below the 50. So you see price falling and then we're pulling back into the area. If we get resistance, just please know, if we get a drop on crypto markets, a move to the mid 3000s for Ethereum is normal in play. People will be so frustrated if something like this happens. I will be doing videos still bullish, not only because the technical move is normal, but even we have something like the shutdown data saying, you know what, Bitcoin in previous, shutdowns basically did something different, right? And basically, this chart illustrates that. So let's just keep an eye in terms of like how this plays out on the short term, but just know Ethereum is kind of giving us a nice roadmap. If we see Ethereum start breaking above the 20 and the 50, so really $4,400, and then this lower trend line, we might have just this break into a new price discovery move in the next couple of weeks. But for me, I'm just like, you know what? It's 50-50. What happens between now and October 15th, basically, the first half of October? It's 50-50. I don't know. I'm not going to sit here and try and guess. I just know I'm ready for either scenario, but it's the macro that means a lot to me on the Ethereum chart, on the Cardano chart, and on all of these risk model charts and all the charts that we have back here. So these are my thoughts today as we begin October. Some might call it October. Do not think anything is guaranteed, but let's continue tracking the data. Let's continue trying to prepare. And I appreciate all of you watching. If you're not in our intelligence system, please get back there, get set up with our risk models, our exit planner, our AI that's back there, and start planning, everybody. Start strategizing. Again, I say this a lot. I'm very excited to be able to offer this product and grow this company. And I really think that the tools will be valuable to all of us. So appreciate you watching. If you enjoyed the video, smash that like. I'll see you in the next video. God bless.